Hello everyone, I hope you all are doing well. Today's topic is Global Depository Receipts. In short, it is called GDR. Let us first understand the term depository receipt. A depository receipt is a financial instrument or certificate representing certain securities issued by a company in a foreign capital market. In other words, a GDR is an instrument issued abroad by an Indian company to raise funds in some foreign currency and is listed and traded on a foreign stock exchange. If the depository receipt is traded on USA Stock Exchange, it is called ADR, American Depository Receipt. If it is traded on European Stock Exchange, it is called GDR, Global Depository Receipt. And if a foreign company is willing to raise fund in India, then an Indian depository bank will issue the receipt and it is called IDR, Indian Depository Receipt. Many Indian companies such as Infosys, Reliance, Wipro, ICICI Bank, etc. have raised money through issue of GDRs. Let us now discuss the mechanism of Global Depository Receipt. In this process, 4 parties are involved. First one is listed Indian company. Second one, domestic custodian bank. Third one, overseas depository bank. And the fourth one, foreign investors. If an Indian company wants to raise fund overseas, that is from foreign investors, it can do so through depository receipts. It cannot directly issue its shares to the foreign investors. The Indian company will have an agreement with the domestic custodian bank. This domestic custodian bank will hold the equity shares of the Indian company as a custodian. The next step in this process is that the Indian company will then enter into an agreement with the overseas depository bank, which is a foreign bank, for the purpose of issue of depository receipts. Then the overseas depository bank will enter into an agreement with the domestic custodian bank to issue depository receipts to the foreign investors. And on the instruction of the domestic custodian bank, the overseas depository bank will issue shares to foreign investors. Physically, the shares do not go into the hands of the foreign investors. The foreign investors have depository receipts or certificate as a proof of buying shares of an Indian company, which can be freely transferred in their stock exchange as a negotiable instrument. GDR is usually denominated in US dollars. So the purpose of an Indian company to raise fund overseas can be achieved by this process. That's all for today. Thank you very much for watching.